WEC Energy Group, the Wisconsin-focused utility serving 4.8 million customers across Wisconsin, Illinois, Michigan, and Minnesota, with a data center power strategy positioning it as the Midwest's AI infrastructure utility.
FY 2025 revenue $9.8 billion. Q1 2026 EPS 245 beat the 230 estimate by 7%. FY 2026 EPS guided 551 to 561, 5 to 7% long-term CAGR.
Wisconsin Energy Corporation was founded in 1896, building the electric and gas infrastructure for Wisconsin's industrial and residential customers across a century of regulated utility operations.
WEC Energy Group was formed in 2015 through the acquisition of Integris Holding Company, adding Peoples Energy in Illinois, Michigan Gas, and Minnesota Gas to create a four-state Midwest utility platform.
In 2025, the Wisconsin Public Service Commission approved WEC's new data center tariff structure, enabling AI hyperscalers to connect under rates designed for high-volume demand.
Wisconsin electric and gas operations generate approximately 65% of earnings. The core Wisconsin franchise serving Milwaukee, Madison, Green Bay, and surrounding communities under constructive state regulation.
Illinois, Michigan, and Minnesota gas distribution contribute 35%. Natural gas distribution utilities serving residential and commercial customers with steady, weather-sensitive cash flows across the upper Midwest.
FY 2025 revenue $9.8 billion. Earnings growth driven by infrastructure investment in the regulated base. WEC has delivered consecutive EPS growth for over 2 decades without a single earnings miss.
Q1 2026 East 245 beat 230. FY 2026 EPS guided 551 to 561, 5 to 7% long-term CAGR.
Alliant Energy serves neighboring Iowa and Wisconsin territories, similar Midwest footprint, similar regulatory construct. WE's data center tariff approval is a structural differentiation Alliant has not yet replicated.
Ameren and Evergy serve adjacent Midwest markets without Wisconsin's data center tariff advantage. CenterPoint Energy competes in natural gas distribution in Illinois and Minnesota, but without WEC's electric AI opportunity.
WEC's differentiation is the Wisconsin regulatory win, tariff rates specifically designed for hyperscale AI data centers, making WEC the preferred Midwest utility for compute build-out.
WEC Energy serves 4.8 million customers across Wisconsin, Illinois, Michigan, and Minnesota, anchored by Wisconsin's industrial base across the Milwaukee to Madison corridor.
Wisconsin is the fastest-growing AI data center target in the Midwest, attracting hyperscale announcements from Microsoft, Google, and major cloud providers.
Scott Lauber has served as president and CEO of WEC Energy Group since February 2022, a 30-plus year WEC veteran who rose from accounting and finance through CFO to the top role.
Lauber holds a finance degree from the University of Wisconsin. Under his leadership, WEC secured the Wisconsin Data Center tariff approval.
WEC Energy Group, the Wisconsin-focused utility, $9.8 billion in FY 2025 revenue, serving 4.8 million customers with a state-approved AI data center tariff, making it the Midwest's preferred power provider for hyperscale compute.
Q1 2026, EPS 245 beat the 230 estimate. FY 26 EPS guided 551 to 561. Wisconsin's data center tariff approval unlocks a decade of AI-driven load growth. WEC's regulatory strategy delivering.
WEC Energy Group is a regional regulated utility holding company serving Wisconsin, Illinois, Michigan, and Minnesota through multiple subsidiaries, including WE Energy's, Wisconsin Public Service, Peoples Energy, and Upper Michigan Energy Resources. The company serves approximately 4.6 million electric and gas customers across a territory that is experiencing a meaningful demand inflection from industrial investment, data center development, and manufacturing reshoring driven by CHIPS Act and IRA incentives. WEC's Q1 2026 results reflect that inflection, accelerating faster than consensus expected.
Revenue for Q1 2026 came in at $3.434 billion, above the $3.321 billion estimate and up 14% year-over-year. Earnings per share of $2.45 beat the $2.30 consensus by 6.5%. The beat reflects higher load across WEC's commercial and industrial customers, including a notable contribution from new data center customers in the Milwaukee metropolitan area, combined with operating discipline that held O&M expense growth below 2%, despite inflation. Weather was a neutral to slight positive factor.
CEO Scott Lauber has led WEC since 2022 and has maintained the operational excellence culture that WEC's prior CEO Gail Klappa established over a decade. Lauber's strategic priorities are three: invest in renewable generation to meet Wisconsin's clean energy portfolio standard, harden the distribution grid for reliability, and grow load by working proactively with economic development agencies to attract new industrial customers to WEC's service territory. The data center wins in Wisconsin are partly the result of WEC's active participation in site selector conversations over the past 2 years.
The Renewable Energy Capital Program at WEC is one of the most active in the Midwest utility sector. The company has approximately $3.5 billion per year in capital expenditure guidance through 2027, with roughly 40% directed toward renewable generation, primarily wind and solar in Wisconsin. The Inflation Reduction Act's production and investment tax credits make these projects financially attractive. WEC estimates the IRA reduces its after-tax capital cost on qualifying projects by approximately 25%, which improves the return on equity of the Renewable Capital Program above the Wisconsin regulatory allowed rate of return.
Wisconsin's regulatory environment is generally constructive for WEC, with the Public Service Commission of Wisconsin historically approving rates that allow the company to earn close to its allowed return on equity. The last major rate case settlement provided WEC with a return on equity of approximately 10% for WE Energies, which at current long-term Treasury rates represents a reasonable spread. The risk is that as WEC's rate base grows rapidly, projected to increase from approximately $21 billion in 2025 to approximately $27 billion by 2028, rate case settlements become more contentious and customers experience higher bills.
Data center load growth in Wisconsin is emerging as a meaningful demand catalyst that was not in most WEC models 12 months ago. The company has received interconnection requests from data center developers representing approximately 1,200 megawatts of new load over the next 5 years, equivalent to roughly 15% of current peak demand on the WEC system. If a significant portion of this queue executes, it would support WEC's rate-based growth projections and potentially drive upward revisions to the long-term earnings per share growth guidance of 6 to 8% annually.
The natural gas infrastructure segment, WEC's Illinois and Wisconsin gas distribution business, is a smaller but important contributor to the overall financial performance. Natural gas distribution is a stable business with predictable returns, and the gas customer base in WEC's territories tends to be more residential-heavy and less sensitive to the commercial load volatility that affects the electric subsidiary. The gas business also benefits from infrastructure replacement programs that allow WEC to earn returns on replacing aging cast iron and bare steel pipe with modern polyethylene distribution pipe, a capital program that carries relatively low regulatory risk.
WEC's dividend history is one of the most consistent in the regulated utility sector. The company has increased its dividend every year for over 22 consecutive years, growing it at an annualized rate of approximately 7% over the trailing decade. The current yield is approximately 3.5% at recent prices, with management committed to growing the dividend in line with earnings per share growth of 6 to 8% annually. For dividend growth investors who want utility exposure with a long compounding track record, WEC is one of the better options in the large-cap peer group.
The key risk for WEC over the next 2 years is execution on the Renewable Capital Program. Building wind and solar at scale in the Midwest involves permitting, interconnection queue, and supply chain challenges that can delay projects and inflate costs above budget. Any material cost overrun that is disallowed in a rate case would reduce WEC's earned return on equity below the authorized level and create downward pressure on near-term earnings. Management has a track record of on-budget and on-time project delivery, but the scale of the current program is larger than anything WE has executed in its history.
Key metrics to watch at WEC Energy: commercial and industrial load growth percentage versus plan, rate case filing and resolution timeline, capital expenditure versus guidance, and data center interconnection queue progression. Any updates to the 5-year capital expenditure plan, whether upward to capture more data center load or downward due to regulatory pushback, will have direct implications for the EPS growth trajectory through 2028.
WEC Energy's Wisconsin data center opportunity has accelerated materially over the past 12 months. The state has become an emerging destination for hyperscale compute infrastructure because of available land, water access for cooling, and a regulatory environment where WEC has established constructive relationships with the Public Service Commission. Management has disclosed load commitments from multiple technology customers and has been filing for new generation resources to serve the added demand. Wisconsin's load growth had been flat for decades, so this inflection represents a step change in WEC's capital deployment runway and earnings growth trajectory.
The dividend growth track record at WEC Energy is something income investors hold in high regard. The company has raised its dividend for 22 consecutive years, one of the longest streaks in the regulated utility sector. Management targets annual dividend growth in the 5 to 7% range, supported by rate base expansion and the earnings growth driven by infrastructure investment. The payout ratio is managed conservatively to ensure sustainable growth without straining the balance sheet. For investors building an income-oriented portfolio, WEC's combination of yield, growth, and reliability positions it alongside the most trusted utility franchises in the United States.
The renewable capital build-out is proceeding across WEC's territory with a mix of owned generation and purchased power agreements. The company has deployed meaningful wind capacity in the upper Midwest and is adding solar to serve the renewable energy certificates required by large commercial and industrial customers, many of whom have their own net zero commitments. The Inflation Reduction Act investment tax credits have lowered the net cost of renewable additions for customers, which has reduced opposition to rate increases and improved the regulatory approval process. Management has guided for over $4 billion of capital investment annually through the decade, creating a durable earnings growth engine.
WEC Energy operates across 4 states, Wisconsin, Illinois, Michigan, and Minnesota, which provides meaningful regulatory diversification. While Wisconsin is the dominant jurisdiction, the multi-state footprint means no single regulatory commission can disproportionately affect total company earnings. Each state utility files its own rate cases on separate schedules, and the portfolio effect smooths earnings through any individual state's review cycle. Management has also built constructive relationships with each commission through consistent investment in reliability and customer service metrics, which creates goodwill when rate requests are reviewed. The track record of earning close to authorized returns across the footprint is a key differentiator relative to utilities that routinely earn below their allowed rates of return. Everything on Charged Alpha is financial education and analysis, not personalized investment advice. Past performance does not predict future results. Always do your own research, understand your risk tolerance, and speak with a qualified financial advisor before making investment decisions.
Ooh, we do! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.